down here, I didn't take it for this squeeze. I was afraid it will just go a little bit back up to the high of the day, squeeze back down. That didn't happen. It actually squeezed above the daily level, and around here there was literally no good stop loss. If I took it to the long side at the break of this area right here, as I told you, I can just put stop loss inside the 1 minute candle. I could have used the half 1 minute candle, but it wasn't really clear right back then. It could just simply continue consolidating in this range above this moving average. So I just missed this entry, and then it just continued going higher, not offering a good entry to the long side. It did offer one short entry right here. This was a level 2 play. It didn't work out immediately, so I bailed once it started forming a hammer, and then it did a good parabolic reversal there. What about entry at 12.96 stop? 12.96 stop at 12.80. That's good. That's definitely a good one. But NCLH doesn't move a lot. You could see that on the daily, on those moves, if you look yesterday when it was chopping around, it was chopping in around 20-30 cents range, right? So maximum what I could take out of it, having a huge stop loss on this thing, is a 30 cents, which is a 2R, and I didn't want to go for a breakout only for having 2Rs. For me, open range breakouts or the harmonious charts, I go at least for 3Rs or 4Rs on those type of trades. On parabolic reversals, at least 3Rs or 4Rs. On ABCD patterns, I could go for 2Rs. It's just too much to have a stop loss for 16 cents on NCLH. It did actually work out. You could see it made actually 46 cents move, which is a 3R, but this is a really huge move right there. I think I saw Thor putting stop loss inside wide range just below the pre-market level, so 12.95. I don't actually do that. I know Thor uses the daily levels, and after they break out, he gets his entry and puts his stop loss below the levels he's drawn there, but that doesn't work consistently for me. He's good at that. It works really well for him, but I don't find using daily levels or pre-market levels, which we draw as stop losses, work really consistent, at least not for me and not for my style. So I just prefer continuing with my style. I could use the daily levels as confirmations for reversals. I could use them as targets, but I don't use them as stop losses if they break out of them. So yeah, that's it, and let's go to the trade review. If you guys have any questions, you could always follow with them. Let's see, so Arthur traded Uber. This is the 15-minute chart, and this is the 5-minute chart. Arthur, do you use the 1-minute chart or use the 5 and the 15 only? I found how to trick myself into not losing money while picking bottoms. Uber, trade 1, share until I finally have that aha moment, and then play my risk. Amazing what silly thing, but it works. That's actually good. I mean, if that works for you, why not? Now I have to work my way out of my bad habit. At least I'm not losing money. That's good. So you're losing 2, 5, 15 hourly and daily 2. Yeah, because I see here only the 15 and the 5. So I assume that you don't use the smaller time frames. Let's see what you did there on Uber. So this was, guys, a bearish engulfing or bullish engulfing sandwich right there. It's not a bad setup. I like it. But I don't love entering on the same candle. Let me get my epic pen. I should have got it ready before. This is going to be hidden, and there is the epic pen. Yellow color will be here. So look at this. This candle right here, this setup, I like it. I like to see this bearish bullish engulfing sandwich. Once I see that it got engulfed, I wait for the next candle. The next candle is telling me whether I should enter or just should stop out, just to have a clear stop loss. I'm not sure what was there in the smaller time frames. If there was small reverse ABCD pattern inside this candle, I would take my entry similar to what you did and put my stop loss inside that small 1 minute pattern. A bigger pattern or setup inside the small pattern to determine entry and determine the stop loss. If there was nothing on the 1 minute chart, it was just making lower highs and lower lows for 5 minutes, then 100% I'm not taking this short right there, because I won't have a great technical stop loss. I will wait for the next 5-minute candle to pull back a little bit, which it did right here. This was small pullback right there, and once the candle goes from green to red, that would be my entry, stop loss right above the wick, and then just go for it for the downside. If it gives me the 2 hours, then that's great. I will take my partial. If it doesn't, then I'll get stopped out for a loser. So this was, I assume, short and you got stopped out. Then you try to take it to the long side and you got stopped out. And again, multiple longs and you got stopped out, and the short and stop. Was it like that? Because that was a little bit of many trades right there, and I used to do that. If I am not biased to one direction, if I don't have a clear setup, all time long. So this was a long right there, this was a long right there, this was a long right there. Okay, that's too much of long right there. So look, this long right here, definitely not taking it. It's forming, as I told you, a bullish engulfing sandwich. This is a weak pattern, so I wouldn't go against a weak pattern. This is the first rule. Don't go against a pattern which is forming. I mean, for me, one of the rules I'm using. So this I wouldn't have taken. This right here is not bad, depending on what's happening with the 1 minute chart and the 2 minute chart. Unfortunately, I don't have them, so I can't comment them. I like this right here, wasn't bad, because you took it to the long side after what we could call a fake breakdown and after a hammer at the low of the day. So this was decent, this wasn't bad, but unfortunately it got you stopped out, and I also wouldn't have used the low of the week as my stop loss. It would be somewhere down here. So this setup is fine. These two, not really sure about them. You tried multiple times to take it to the long side there. Now this, I like it a little bit. Why do I like it? It's extended from the moving average right there. It broke the moving average right here, so you are having a technical level for your stop loss. It's squeezing back up after a fake breakdown. And why is it a fake breakdown? Look at this, guys. You're having a support right here, 4 candles. It was holding this level right there. It broke down, came back up, squeezing right there, and that wasn't a bad entry. So this entry and those entries, they are both amazing. You're having a hammer for confirmation, adding to your position. So this was amazing. You really tried to catch this move a lot, but look at this, you had many stabs right there. And it's good that this setup worked so much. So try to be a little bit more patient about the setups. Yes, you made it all there, but remember, sometimes you could wait for a setup which will never happen, right? So this pattern which happened here, if it didn't reverse here, it could have continued happening all the way down there. You would have been getting stopped out one time after another, right? You tried it many times until it finally worked out, and I'm glad that it worked out. You were looking for a setup, you were biased, and it did eventually happen, but it could have just never happened, right? The market doesn't work out every time as we want it to work out. So try to catch the good setups, and if it doesn't give you a good setup and just goes without you, then let it go. You'll catch something else. JD, let's see what you saw there. Now this is again a parabolic move right there. This is the 15-minute chart. This is the 60-minute chart going into a support, and I like this. Look at this, guys. This moving average, it's been respected before, so it got respected one more time. Right here you have a resistance area, which is not bad. That's good. On the 5-minute chart, it's going parabolic into a daily level right there, again a support. Not sure what the 1-minute chart and the 2-minute chart had, but if there was an increasing volume right there on the 1 and the 2-minute chart, if they gave you good looking 1 or 2-minute candles, this would be a really good entry right there. The 15-minute chart, I can't see the volume. Look at the 15-minute volume. I see the volume, it looks decreasing there, but I wouldn't say a lot about this one. You have an increasing volume on a new 15-minute low, but you couldn't have caught this, right? Volume right there. You would have noticed it on this candle, and you could have added once the selling pressure started happening. Other than that, I think this wouldn't have been catchable there, but still, I like your patience. You partialed really well on this one. So yeah, this was a really good thing, and I love how you caught it from the first time. You were really patient about it. You waited for it to go to the resistance area. You got your good entry. You held really good to your winner, and that was good. And by the way, on your Uber trade, I really loved your patience as well. Yes, you got chopped out a lot, but you didn't start partialing so fast to make your losers back. So that was also a good thing. If you are holding into your winners that good, I bet you will be consistent. It's really difficult to hold to your winners without taking any partials. J-Bone. I actually didn't read the name when I opened, but I remember your style here. So it is J-Bone, right? set up ABCD pattern type C, and look at these guys. Why is it ABCD pattern type C? It's going from A to B, uptrending right there. It's pulling back, forming the first C, coming back up, dropping down, forming the W shape right there. J-bond takes it to the long side, and I assume this was your stop loss, right? Then once it did the breakout, add it to his position and started partial on the way up. I assume you started taking partials so fast because your stop loss was at a new 1 minute low after the breakout. Let's see. Indicator, strong daily chart. Look at these guys. BA, it had sort of a descending triangle, fake breakdown, started coming back up. So this is a strong daily chart. Near view up and close to the 9 moving average on the 5 minute chart, and that's really good. You're having an ABCD pattern on a stock which is not so extended. It did a decent move on the 5 minute chart. It pulled back literally to the 9 moving average on the 5 minute chart, closed as a hammer for a confirmation, gave you the W shape on the 1 minute chart. It's close to view up, so it still has a lot of room to go there. Entry, new 2 minute high after this small hammer on the 2 minute chart, and added at the breakout. Stop level set by the previous price action at 9:45 and 10:05. Let's see that. 9:45, and it's somewhere right here, and 10:05. Was this your stop loss, this level right here after you entered, or this level right here? The second level, right? The second one I drew. Intended to get 3 to 1, but you got 3.5, which is really good. Second after the ad. So yeah, I assume it was somewhere right here after that. So yeah, this was a really good one. And remember guys, when you are getting inside the range, and this was inside the range. Why was it inside the range? This was the chop right there, right? It was inside the range of the second consolidation area. So if we take an entry right here, our stop loss should be below the wick right here, below the second bottom right there. If we are entering at the breakout, and you could just simply add at the breakout, similar to what J-bond did, you could move your stop loss and put it at a new 1 minute low, because you are getting in at the breakout. And after you are getting in at the breakout, usually what happens, it either shoots up immediately, or it could break out, pull back, respect the previous resistance as support, and then shoot up. If it gets back into the range, then the stock is not so strong and there is no reason to hold on to it, and that's why having a new 1 or 2 minute lows after breakouts is more than enough. So yeah, this was a really good J-bond. Let's see your AZN. Oh, I missed AZN trade. I really wanted. Should I have scaled out that quick? You didn't have to do that actually. Looking at it, it just broke out. It was making higher highs and higher lows. No reason to partial yet, but if you got the risk to reward, the intended risk to reward 2 or 3 hours, then it just depends on you. You could take partial, definitely better if you are so patient to just hold on to your trade, because if this is a good setup and if it works out as intended, it will give you a good risk to reward. If it's not that good and it fails, then it just simply wasn't a perfect setup and you'll catch another good setup. Now look, this first partial, definitely not really necessary. It just broke out right there, but I see it was the daily level, so you had, or you want to take partial there. Once it broke the daily level, literally no reason to partial, right? Like this partial right here, I like it. It was smart. You took it at a new 2 minute low. It was not so far from the 9 and the 5, but it could just simply pull back, right, and get you stopped out as fake breakout there. So this partial right here, it was good, and I wouldn't have exited all at a new 2 minute low. One thing I'm doing now, if I'm getting into ABCD patterns, I definitely care about the new 2 minute lows. So I would take partial at a new 2 minute low, but I use the 9 moving average a lot because this is the first strong support which could hold the price from reversing. So if I am having a new 2 minute low and I am long on it, I would simply hold on to it and see what it does at the 9 moving average in the 2 minute chart. If it breaks the 9 moving average in the 2 minute chart, then I simply bail on the trade. If it holds it, then I continue holding on to it. Same thing I'm doing now on parabolic reversals. If I take stock to the short side and it drops down, bounces of the 9 moving average and gets to my break even, I'm 100% bailing out of this thing without holding to my original stop loss. If it works out and it breaks the 9 moving average on the 2 minute chart, even if it starts pulling back, I don't care about this pullback because it already broke the 9 on the 2-minute chart, and it could just simply continue going lower. Lou, do you mean right here? Right here? Theoretically, it's good. It's still an ABCD pattern. But for me, I found it more consistent to enter after the second leg on the W shape, because it usually does a lower high, which it did right here. And if it's weak, it will be a double top with the second top lower than the first one, and then it will just simply drop down. If it's strong, it will make a higher low wave and start forming an ascending triangle and then break up. Why don't I like entering at the first leg up? When don't I like entering after the first leg up? When I see that the pullback is violent, or the pullback is showing me is happening with really weak confirmation candles. You could see here it went up, it dropped down. It did sort of an ABCD pattern, weak one, the one I would have definitely not taken right there. But it tried to break up, and then it closed as a reverse hammer and dropped back down, so it was weak. Then it came back up. So what's telling me, or what's preventing this new high doing the same thing which happened right here? It's still there is still no enough confirmation. It could definitely work out, but definitely not enough confirmation. And I find that these type of setups, sometimes they work, and if they work, I don't care about that because I see that they are failing more than they are working. After this confirmation right here, the probability of the setup working out is more. Not literally to my original stop, but I could hold on that for a small loss into it if it breaks the 9 into 2. So AZN, let's see what you did there. Indicators, engulfing moving average, or engulfing candle on the 5-minute chart. You see this here, right, guys? Maintaining pre-market level and trending higher after bounce of view up. Gap up on the daily for all-time high. Yeah, AZN was literally strong in the pre-market. I saw that one. Stop support level 56.72. I like your stop loss right there. I'd have definitely used the same thing. Intended 2 to 1 for a break 5-day. Actually, you exited at break even. Got 0.05 away from the 2 to 1. Should I try getting an entry a couple pennies earlier so reduce my risk and have gotten my 2 to 1? So look, I like this setup definitely. AZN was so strong. At the open, it dropped down all the way to the 9 moving average on the 5-minute chart. Now this is not an ABCD pattern. It's a bullish engulfing crack setup. It dropped down, squeezed back up, got closer to the place where it closed at. You took it to the long side on a new 2-minute high. So you could see here you have an engulfing candle on the 2-minute chart. It started engulfing on the 5-minute chart. It's gapped up on the daily. It's strong on all the time frames. Definitely I would be long bias on this setup. You took it to the long side there, and I think I would have taken it not here to the long side. Let me zoom it in a little bit. If there was time to get into this setup, my entry is always once the candle goes from red to green. So by this moment it was red, right? Then it started coming back up, and once it's turning green, that would be my entry. I'm trying to do that. I don't wait for it to go all the way up there. If it gets back then from green to red and drops down, it would be a small loser, and that will be fine. But getting an early entry would definitely help there. You get an entry once the candle moved from red to green, and put your stop loss at a new 1-minute low. I don't care about this daily level. I think you put your stop loss at the daily level, right? It wasn't the low of the candle, but for me it would have definitely been the low of the candle. Why is that? I don't use those daily levels or pre-market levels as my stop losses. I use them as targets. So if you are long anywhere there and you are getting into this daily level, definitely would take some partial there. If you are getting into this daily level and it starts forming a parabolic reversal, then I would take it to the short side around this daily level. Those are just confirmation areas, but I don't use them as stop losses after breakouts. So in this case, when you took it to the long side, my stop loss would definitely be here. But if it was possible for you to get an earlier entry, if it gave you that opportunity, it would have been definitely much better to get an earlier entry right when it moved back to green you definitely had a little bit tighter stop loss, and this would have been even a 3-hour trade right there. One more thing there, I wouldn't have waited for a break even. Why is that? The stock was already extended in the pre-market. Look at this move it did in the pre-market. Where is it? Where is it? Where is it? Where is it? It moved all the way from 55 and even lower than 55, right? I can't see it there. Yeah, around from around $55 all the way to $57.40. So you could see that it was literally bullish, and it did already a huge move right there, right? It got into a daily level, bounce of that daily level, forming sort of parabolic reversal. It was already enough extended, right? 56, 50, 57, 50. This is around $1 move from the 9 moving average in the 5-minute chart. So looking at this, stock extended from the 9 moving average in the 5-minute chart, hitting a daily level, closing as a doji, making a new 1-minute low. This is a decent parabolic reversal right there, right? So I would just either take partial or just bail on it once it did this new 1-minute low, even if it's not a 2-to-1. But even though exiting at break even, it was still a good thing. So Lenny, let's see what you did there. Perfect. mRNA took mRNA for a reverse ABCD pattern, right? So look at these guys. Stock dropped a lot, right? Pulled back all the way closer to the 9 moving average on the 5-minute chart, started resisting or rejecting below view up, made a new 1-minute low, which was the entry. That was your stop loss, right? Was it above view up, or you gave it more room? I assume, I mean, personally, if I had taken this setup, my stop loss would definitely be above this resistance area right here, or above the consolidation area, so it was decent. One thing I would worry about is this candle right here. Remember how I told you I don't like getting into reverse ABCD patterns against hammers. So if my target is at least right here, this right here would be my target, then I would go for this setup with a really tight stop loss, because I mean half move right there would give me the risk to reward. If not, I would just simply avoid it, and I would wait for more confirmation, because I'm afraid it will make a higher low similar to what happened right there. But after it forming an M shape right there, I would have definitely taken it to the short side, even against a hammer. So once I see a hammer on my way at the low of the day, I don't take the first leg down. I usually also wait for an M shape, even though the pullback wasn't parabolic. It was just simple and decent pullback there. I like how you held onto it all the way to the low of the day for the first partial. Good second partial right there. I'm wondering how many R's you got there, Lenny, but I think Lenny is not here with us. But yeah, this was a really good one, like really tight stop loss, a couple of cents, and really good reward right there. You could see it right here. This is the reward, and that is the risk. It's like literally nothing. Louis, you could post a screenshot in the off-topic chat, and we'll go through them. The camera is on YouTube. Unfortunately, I can't open it in the chat room on YouTube, but I'll fix that somehow. I think I'm just not good yet on XSplit. So let's see your next trade, Lenny. AZN, let's see what you did there. Same thing, right? An engulfing candle got into the long side there, similar to what J-Bone did. Right after the hammer, it bounced off the daily level and you held it to your maximum loss. So I see you put your stop loss exactly at the low of the candle, just to have the technical level the stock bounced off, and that's smart. I like that. Personally, I'm not sure I would have taken an entry here if that was my stop loss, because this is just a little bit too much, I think. Either I tighten my stop loss for the breakout, or I just avoid this setup. But despite that all, you are having a daily level right there, right? At 57. 15. The stock is going all the way to the daily level, literally touching it, and this is so clear that it bounced off this daily level and starts to drop down, getting back into the range. So in this case, I would definitely exit either at break even or for a small loss. Wouldn't definitely hold it all the way to, for a max loss. Low. This is the good setup, guys. You see this? This is a 5-minute open range breakdown with a reverse ABCD pattern on the 1-minute chart, and this is one of the A+ setups I have on my playbook. An open range breakout on a big time frame, which is a 5-minute chart with a reverse ABCD pattern on the 1-minute chart, or an open range breakout on the 15-minute chart with a reverse ABCD pattern, let's say on the 5-minute chart. So yeah, this was a good one. Really tight stop loss. I love how you held to your target through all this consolidation, through the pullbacks right there, all the way to the daily level. So this was really good, Lenny. mRNA, let's see what happened there. So mRNA opened up strong, went all the way to the daily level. This was the high of the day by that moment. It broke the high of the day and went into the daily level right there. See, this is the gap right here, but this was a fake breakout, went literally into the daily level and got back into the range. Once I see that the stock is getting back into the range, this is a weak sign for me. This is a reversal sign. I stop looking at it for long and I start looking at a pattern for the short side. If the stock starts holding and bouncing, this is the first leg up. I avoid it and definitely not taking this thing. Why is that? Because this could be a pullback for a continuation to the downside. When will I be interested in taking this thing to the long side? I'll be interested in taking this thing to the long side if it bounces, drops, and bounces. Does either an M shape with a double bottom, a W shape, or it does a W shape with a second bottom higher than the first one. This will indicate me that the stock is strong. But once it gets back into the range, even though it's doing a new high and it's getting above the moving average or the crosses, I'm definitely not taking this thing to the long side because it usually could be a fake out. How would you take it to the short side? This was a good entry right there. You see it got back into the range, right? It dropped below VO up. It pulled back, tried to break up, bouncing off this moving average right here. And remember what we said before? The first time the stock gets into a moving average, I'm definitely not shorting it. Not here and not here. Why is that? Because you're having a support here and you're having a support here. First time the stock gets into a moving average, it's more likely bouncing out of it. The second time it gets into a moving average or a daily level or a support, it's not 100%, but it's more likely breaking it. So this is the moment where it bounced out of the moving average. It wasn't strong enough to get above view up and it started dropping back down to it, getting a second time into the moving average. So you take it to the short side for the breakout. Unfortunately, it didn't break immediately, but if you get a good entry and if you have a technical stop loss and if the setup is good and it's going to work out, you should hold through the consolidation. And then look at this. It starts forming a descending triangle. I really love how you manage this thing. You're getting into the short side here and putting your stop loss right there for the breakout on the second time. It fails to break the second time. It starts forming descending triangle. Then you go in for the breakout and you move your stop loss to be a little bit tighter than it was before. So this was really good. It broke down. Now this is something I wouldn't have done. So look at this. You are adding right there. You're having your stop loss tight right there. And these daily levels should be target. Remember what you said? Daily levels, we don't use them a lot as stop losses, but we should definitely use them either as targets when we are short, for example, or as indicators for reversals on parabolic reversals. So this daily level, if it gave you the risk to reward, you could have taken partial right there. Once it bounced out of this daily level, I wouldn't add right here to the short side. First thing, you're having a hammer on the 5-minute chart with an increasing volume. This is a reversal pattern. Then you are getting a parabolic reversal right there. You are having the climactic volume. You see this volume in compared to all this volume right there? You're having a climactic volume, not in this candle, on this candle right there. And it's making higher highs and higher lows. It could be simply a sign to just bail on this trade. Hey Erod, welcome here, and if you have any questions, feel free to ask us. Now, Ayman, could you please look back at Lenism RNA? Okay, let me open it one more time. Is there anything you want to ask, IG? After the M right here, this would be my stop loss. This let me actually zoom it in more because this is already small enough. Let me move it in right there. So I wouldn't use this wick as my stop loss. I never use the wicks as my stop losses, especially if I see a clear resistance area. So that would be my stop loss. Not the wick, the candles right here. The entry would be once I see a new 1 minute low candle. It will be either here, either here, either here. You could have any of those. I mean, even this would have been good because this was a reverse hammer. This was a fake breakout, and then it's coming back down. Yes, exactly. That's it, IG. Preferably to have confirmation candles. I love the confirmation candles because they just make it more easier. I don't go in on a new low after a hammer or something like that. Yes, Lexi, I use Kyle's hotkeys. They just make it all much easier. So look at this. Charles traded AZN to the long side. Now this was a little bit aggressive. I think you have taken this thing to the long side here because of the long buys, right? But this was so risky. You're having a bearish engulfing, bullish engulfing sandwich right here. It's breaking down. You're taking it to the long side. Now for a scalp, if you saw something on the level 2, it's not bad. I would have taken that as well. But if there were no indicators, I definitely wouldn't take it to the short side here, especially after this huge drop. It could just bounce at any moment and drop back down. I see that you managed to make it to winner, but this was a little bit risky. Unless you had some other indicators other than what you saw on the chart. Then look at this. You're trying to get in again to the long side. This is not bad, to be honest. Fake breakdown. Coming back into the range. So yes, this wasn't so bad. It still was a little bit risky because it's just doing this pattern one time after another. See, it's just more weak than it's strong. But again, this is not the worst step. This is actually was decent. Not A plus, definitely not A, but I could see a fake breakdown. It was more strong on the daily. I bet it bounced off the 9 moving average in the 5 minute chart or from view up right there. So yeah, this was decent. It wasn't bad, but yeah, it was a little bit risky. You held all the way up there and exited the last at break even. Now I wouldn't hold this trade all the way to break even because look at this. This is a huge move, right? From 57.50 you are holding all the way to 56.50. $1, even if it's 20%, it's just too much to hold on to break even. Hold it till you are sure that it started forming a reversal pattern. And you could see it's going all the way to the high of the day, a doji at the high of the day, a new low on the 2 minute chart. Now this is a parabolic reversal right there. You could either take most of your position there and leave 5%, because right here I would definitely take most of my position out, because I am trading parabolic reversals, and if I'm long, I know that other people who are trading this pattern will go against me, and there is just simply no reason to hold into a trade once other setup happening against you. You could just definitely not bail all out, because we know that the parabolic reversal, it isn't a reversal all the way to view up and below view up. In this case, it was all the way to view up and even below view up, but this is not why we trade parabolic reversals. We trade those ones for pullbacks, right? We take them to the short side and we intend to get at least a move all the way to the 9 moving average in the 5 minute chart, because after the 9 moving average in the 5 minute chart, it could just simply continue the uptrend. So that's why I'll exit around 70 or 80% or most of my position at a new low, and once it breaks the 9 moving average in the 5 minute chart, that will be my signal to just bail the rest of my position instead of holding it all the way to break even. Ayman, do you use stop limit orders for entries or use hotkeys, more specific calls hotkeys? Anton, I'm using hard stops always. Market orders for stop losses, but it's already there using Cal's hotkeys. I don't have mental stop losses. What are your thoughts on Beyond? I'm looking at short below 136 and above 139. Let's see Beyond quickly, because I think we'll be able to finish everything today. Beyond. So beyond, looking at the daily, it's weak. Looking at the 5-minute chart, it's weak. The 15-minute chart is weak. The 2-minute chart is weak. Now, regarding the entry, look, this is the confirmation candle right here. It went up and it dropped down right here. You see, it made a new low, tried coming back up, dropped down again, closed as a reverse hammer on the 5-minute chart. You are having double confirmation candles. You are having sort of an M-shaped new 5-minute low at 137. This would have been the best entry to take it to the short side. Put your stop loss at 50 or 60 cents, and then just aim for at least $1.20 for your 2 hours. Now, maybe you'll not get the 2 hours because of this pivot point right here. Maybe you will. So you should pay closer attention to what's going to happen around this area right here, just to determine whether you should take a partial there or no. But yeah, I like it more for short, and this is good. A little bit late. This would have been a good entry, and even if it fails, it will be totally fine. But this is a good setup to the short side. Yeah, Ralam, that's what I'm doing. You're welcome. So Han, let's see what you did. Now this I love. I wanted to get into this Facebook trade, but again I just missed this trade. I was a little bit hesitant. Facebook yesterday, it was so strong. Today it gapped up. Today it was strong. So Facebook is at all-time high. Strong pre-market price action. You could see that simply just uptrending. This was so clear. At the open, it opened a little bit weak, pulled back, and then you're having a fake breakdown. This was amazing candle. I loved it. So you could see that it did lower high, it dropped down, broke the low of the day, but it immediately squeezed back up. Now this candle right here could have been the entry if you were fast enough and if you were brave enough to take it. If not, and if you were a little bit hesitant, this candle right here is still amazing entry. I would have taken it somewhere right there where you took it, or at a new 2-minute low. Put your stop loss at the low of the week, and then just see what's going to happen. Like this partial at the half day. See how we use the daily levels. We use them as our target. Then it's starting to form a parabolic reversal, right? It's already enough extended. It is so extended from the 9-moving average on the 5-minute chart. $2, right? $2 away from the 9-moving average on the 5-minute chart. Closing as a shooting star at the high of the day, making a new 2-minute low right there. Now this is a good sign to take more partial or just bail on your setup, because this is now a parabolic reversal. And look at these guys. This is what I told you. If the stock is bouncing off the 9-moving average on the 5-minute chart, on the 2-minute chart, let's say I shorted it there. Let's just ignore these trades at all. Let's just talk about new setup. Let's say I shorted it at a new 2-minute low right there. It's dropping down, bouncing off the 2 and getting into my break even. Signal to exit at break even. If the stock is breaking the 9-moving average on the 2-minute chart and then it's coming back up to my break even, I don't care about it. I will just hold on to it and see what it's going to do, because it could still work there. Now in this case, there was a hammer. This hammer would have made me a little bit hesitant about holding to my position, and I think I still would have exited break even. If this wasn't a hammer, I would have just held on even above my break even and saw what it's going to do after that. Suyash, not yet, but we'll work on that. We'll make a post on the forums where YouTube subscribers could post their trades. We will not be going definitely through all of them, but we will pick some and go through them. Would you have taken all out earlier? I took the last 20% at break even. Yeah, Han, I would have taken more out right here at a new 2-minute low. MYC, let's say again. I would have, if I shorted beyond, my short would have been around 137. Right here, shorting it, I don't like it. It's 1, 2, 3. And remember my rule, I never go into the short side on a third continuous red candle, or go long on a third continuous white candle, because a lot of times, look at this, just even this candle, looking at this, 1, 2, 3, this is the third, it was the third continuous white candle, and then it's dropping down. Now looking at this, 1, 2, 3, this was the third continuous white candle, and then it's just dropping down. And now look at this, 1, 2, 3, third continuous red candle, and then just starts pulling back a little bit. I don't like getting into trades on third continuous candle on the 5-minute chart. 1, 2, 3, and then it's just pulling back, right? 1, 2, it didn't do the third actually there. But yeah, that's it. So sometimes it works, but looking at this, most of the time it just fails. So an entry should have been on the second candle, and then see what's going to happen. You'll have room to survive pullbacks. Getting into the short side there, right there where we were watching it right here, it's just a little bit late. You can't just take it to the short side somewhere right here and put your stop loss right there. It's around $1 stop loss. You will need $2 move, which is below the low of the day. That's a good risk to reward, but it's unlikely that it will work out. On the 1-minute chart, it's not a rule for me, because of the 1-minute chart, candles could be so small. If the candles are big on the 1-minute chart, then definitely I would implement it on the 1-minute chart as well. But if the candles are small, I don't really care much about the 1-minute chart. It's mostly for the 5-minute chart. If I see a setup forming on the 1-minute chart, and here on the 1-minute chart, you could see drop down, pull back, or start form. Oh my god, what's that? Okay. It started forming a descending triangle on the 1-minute chart. It looks like a reverse hammer right there. Now this descending triangle, it's forming right here. You see a setup forming on a small time frame, and let me actually take it back a little bit so that you see what we saw right there. You see, it's literally looking weak right here, right? It's just dropping down weeks, and someone might say it looks really good like that, right? It looks good like that. It's really weak. Take it to the short side at a new low, and then at a new low, and then just go for the breakout. And look what happens after that. Yes, it broke down, but it started simply pulling back, and that's because it was already extended in the 5-minute chart. Usually try to get an entry as close as possible. On the first candle, on the second candle, third is just too much. Caesar, let's see what you did, and then we'll see Valentin. Accidentally partialed immediately after the entry, so that was your entry and you accidentally partialed immediately, and the hotkey exited me completely when it should have been a partial, and secondary green triangle on the one. So the hotkey for partials, you use hotkeys where it gets you out at break even after partials, Caesar. Oh, you're not doing that, okay. So let's see what you traded. TGX, not a bad setup. You could see it was strong in the pre-market, started selling off before the market opened right there on the 5-minute chart. This is the 15-minute chart there. The 2-minute chart, it squeezed back up right there above the pre-market level we had. You took it to the long side for an engulfing. Now this is not a bad step. I just will be a little bit hesitant where to put my stop loss at, but you could always, for momentum plays, put your stop loss at half candle or maybe at low candle if you want to be really safe. I see that it worked out partially, but you exited or partialed by mistake, by accident a little bit earlier. So you entered again, and this wasn't a chase in my opinion. It was literally at the break of the level right there. You could take it to the long side and put your stop loss right there. Why is that? Because you are having a bullish engulfing crack. And remember how we trade the bullish engulfing cracks? You see the first candle, you see the second candle, you wait for the wick on the third candle, wait for it to go from red to green, you take it to the long side and put your stop loss at a new 1-minute low. Why is that? And why do we use the 1-minute lows or the 5 minutes if you are watching the same step on the 5-minute chart as a stop loss? Because the bullish engulfing crack and the bearish engulfing cracks, they are breakout setups as well. You are having a bull candle on the 5-minute chart or the 1-minute chart, then you are having a red candle. Let's say that this is the bearish engulfing crack. You are having your support right there, right? And then the next candle, it pulls back a little bit and then it breaks out. So remember, after breakout, you are not getting now inside the range. You are getting in at the breakout. So you could just simply give it some room, not a technical level, because this is the technical level right there, but you're getting in for the breakout. And usually after breakouts, it could just pull back to your break even and then immediately work out. So yeah, this setup, it was right there. It breaks out. You could put your stop loss at a new 2-minute low or new 1-minute low. and not bad, partial, reset break even. Exactly, Kizer, that was a good entry there. So Ralam, let's see what you did there. mRNA, it's really tough to review those because are they indicating the entry there? 77.36, 77.36, somewhere right here. So you took it to the long side on this red candle somewhere right here, and you exited at 77.73 right here. And this was mRNA. Was this short or long? I think it was short, right? Because long just doesn't make sense to me. Use the other one, okay. Wait, where is the other one? Okay, I see it. This is it. Wait, did I ignore Valentine's trade? Sorry about this, thank you. Let's go to Valentine. My bad. And guys, if I do that anytime, just ask me to go back and I will take a look at it. That was my bad and I'm sorry about it. So Valentine traded ACB, a descending triangle. The 5-minute chart, I like this by the way. It was a little bit far from the 9-minute average in the 5-minute chart. A new 5-minute low, this wouldn't have been a bad short. This is not a parabolic reversal. This is a reversal pattern. It did an ABCD pattern, broke out, fake breakout, closing as a shooting star at the high of the day. Not a bad short right at the open. If you are fast enough, because this was a really fast and quick drop right there. Pulled back, dropped down, and I assume that this was a short. Let's see what your entry was. You see why this actually faded a little bit? I see that you saw the pattern on the 1-minute chart. You could have simply shorted it there, and you put your stop loss at a new 1-minute chart right there. Was this a 1-minute chart setup, Valentine? Yeah, but look at this. 1, 2, third continuous red candle, right? Exactly. So usually when I see this happening, I just made it a rule because I was just simply losing a lot trying to catch these types of stuff. They do work sometimes, especially when you see a clear setup on the 1-minute chart, and it's really tough to see a setup which looked really good going without you. But I see that this just saves me from a lot of losses because sometimes they do break out, and you could see it did break out, right? Now this is the thing about extended stocks. You see stock which is trending up, then you see it consolidating on the 1-minute chart, literally above the 9 on the 1. It's getting tighter and tighter and tighter in range. You feel that it's going to break out, but the problem is here. It will break out most probably. If you believe it will break out, if you see so clearly that it will break out, most probably it will break out. But the problem is, how much is it going to move after it breaks out? Will it give you the risk to reward? It is already extended, right? It is already the 3rd or the 4th candle. How much is it going to move more? So you'll see the breakout, you'll see you are in the green, and once you are getting from the green into the red, you just can't pull the trigger to exit at break even or exit at small loss. You convince yourself you will just hold on to your max loss and you end up losing maximum loss per trade. And this was the same thing here. It was so clear it wants to break down. It went for a breakdown. You took it to the short side. It did break down a little bit, and then it just simply got you stopped out. So in this case, I wouldn't even pay attention to this level right here, which you drew right there. But yes, this definitely could have been one of the reasons it bounced there. But looking at the 5-minute chart, 1, 2, 3, third continuous red candle, I would have avoided this short right there. Looking at 1, 2, maybe I would have taken it right there because look at this. It pulled back, it dropped down. Now you are seeing a setup on the 1-minute chart. Again, same thing, descending triangle, but at least this is 1 2 second continuous red candle, which is not bad for a short. It is also a reverse ABCD pattern with an M shape right there. This could be an M shape as well, just depending on how you look at it. This is an M shape on a bigger time frame. Not bad short here or there on the 1 minute chart, and then just go for the move. If you miss those entries, not bad. It didn't fail immediately. I see it continued consolidating. It continued forming a descending triangle. Every time it's having this flat line as support right there. Touched it 1 2 3 times right there. This was a fake breakdown right there, so I'll not really include it. Touch it 1 2 3 4 5 times on the upside. This is really good right there. It's getting tighter and tighter in range. You're getting in literally at the breakdown. And at the breakdown, I usually use a new 1 minute high as my stop loss, or the high of the previous wave. It depends on how you like it, but I usually use the 1 minute for the breakdowns. Added more at the break of the next level I see, and then you just started taking partials. That was really good. Now this add I wouldn't have at this place I wouldn't have added because it was already extended. This was already a huge move. The candles aren't really looking good for me. It was a breakdown, it was a reverse ABCD pattern right there, but it wasn't clean enough. If this was an add, I mean, it's decent, not bad, but if it was a separate entry or a separate trade, I would just simply avoid it. And let's see what you did there. Short on a 5 minute shooting star and dojis. I see this. You are having one shooting star, second shooting star, or reverse hammer actually. You take it to the short side and you get subbed out. This is not bad for confirmation candles, but look at this. It did a fake breakdown right here, right? Now this was the low of the day. By that moment it broke down, which is not bad, and it wasn't weak enough to go to pull lower than that. Continued consolidating and broke again, but look at that again. It's breaking down by a few cents. It's not really weak. Into the daily level. After the daily level, it's making a new high. Basically the pattern which was there was broken. The trend is already broken. It came back up, it dropped down. So this is a parabolic pullback on a reverse ABCD pattern. It's good that we're having confirmation candles right there, but it could simply just do a higher low and shoot up without us. And because of that, on those parabolic pullbacks on reverse ABCD patterns, I don't take the first new low, even if it's like that. I usually wait for an M shape as confirmation and then take it to the short side, just to make sure the stock is weak. Do you use the 3 candles rule for the 5 minute chart or something smaller time frames too? Actually, mostly it's the 5 minute chart, but I use it for smaller time frames as well, or smaller smaller time frames if the candles are big. Try got free roll and the next level below 15 have so thought could make a move down. It wasn't bad. It definitely wasn't bad. Ayman, would you happen to have any statistics on how often those ascending or descending triangles actually break out the direction above below the straight price level rather than fail? RT, I used to trade them a lot, and I still trade them, and they are pretty consistent. If you are going to trade this setup and you are worried about how consistent this setup is, by the time I was trading this setup a lot, it was consistent, and I think the market hasn't changed a lot. It will still be consistent. If you see a clear setup with clear confirmation candles, you could just simply take it. And ascending and descending triangles are one of the favorite setups because they're just showing you a clear picture or where the stock is going to go to. Perfect. Now let's go, guys. I'll take a look at one trade for each from now on because we don't have time. I'm sorry for that. Ralam, I'll take a look at one trade here. You could email me the rest and I'll definitely take a look at them. It was my bad. I just spent a lot of time some trades. So what is it end, right? Okay, this is mRNA. This one, right? Okay, perfect. Let's see what you did there. So was this a short or a long? I assume this was a long. Yeah, this was a long because you partial on the next one. So SZN, I definitely wouldn't have taken it to the long side there. To the long side, yeah. Because look at this. Strong move in the pre-market. The market opens and it's making a new 5 minute low. It was extended. This looked up as a reversal. You're taking it at the low right there for long, and I see it was actually, you took it to the long side at 57, existed at 56, and this was a loser. And yeah, exactly, see, it was just simply a little bit early to try to catch this thing to the long side. And the problem is here, when you see a stock which is making a full move in the pre-market and it's extended in the pre-market, it's tough to try and catch a long right after the market opens at the beginning, because the move is already done in the pre-market, and you would need to be a little bit more patient before catching a long after the market opens. It's similar to what happened, I'm not sure, on mRNA yesterday, I think. It did the whole move in the pre-market. Now, here it started holding, view up, started making higher highs and higher lows, and I see a lot of you guys actually took the same setup right here to the long side, right? So yeah, here it was decent. Wasn't the best, but yes, it was decent. You're taking it after the hammer, after the doji, taking it to the long side, partialing at the daily level right there. We had a daily level and we saw it on previous charts, and exited the rest at break even, I assume. 56. No, it was a separate trade, a new trade. Was this a short right there, Ralam? This trade right here. It was still a long. Now, definitely not taking this thing to the long side. Why is that? This was the break of the high of the day. The break of the high of the day wasn't strong enough. It made a small move after it broke the high of the day, and then it got back down into the range. Once the stock gets back into the range, it's not strong enough. We should wait at least for double bottom to confirm that this stock is strong. If it doesn't show that, then I would just simply avoid it. Now it's dropping down, forming sort of reverse ABCD pattern there. I wouldn't take an entry right there to the short side, though it looks really good for the short. Why is that? 1, 2, 3, third continuous candle. But look at this. In this case, it did work out, because sometimes they do work out. But how much are they going to work out? I'm not really sure. It's so rare to have them working out like that. You took it. Now, another thing. Look at this. This is 200 moving average, right? This right here is the 200, if I'm not wrong, Radam. So if I see that stock starts trading in a range between the 9 moving average and the 200 moving average, I usually avoid taking it to either direction. Most likely, and a lot of times, it just breaks down. Sometimes it wicks up, but once it holds the 200 moving average and it starts curling below the 9 and the 1, it starts forming a descending triangle on a small setup. So I definitely am not taking it to the long side for the, after consolidation above the 200 moving average. I want to see it literally breaking the pattern, breaking the range, and starts coming back up, and that's where I would take it to the long side once it literally breaks up the range. Or I would wait for fake breakdowns to take it to the long side. Now this wasn't bad, this was decent, but one thing I hate here, and remember guys what I told you, I hate going against horizontal moving averages on parabolic reversals, especially if it's the first time it's going into the moving average, going back down. Now this is good, a doji at the low of the day, for a fake breakdown, second time it's going into the horizontal moving average, so this is a decent long right there, and you took it to the long side. This is also a good long right there. Why is that? Because it started waving up, it started making higher highs and higher low waves. So yeah, this was all decent right there. If you caught this entry, it's perfect. If you caught this angry, put your stop loss right here and then hold on to it, but definitely not taking it to the long side on the third continuous candle. 1, 2, 3, then you see what happens, a pullback. Here it did work out, but here you either catch it right here at the low, you either catch it right here, which is here, or you just simply avoid it. Right here is just late, it's just the third continuous candle. It's going up and then it's making a pullback, and then it just continues working out. Have you noticed that the stocks can run further if they gap up after the market the day before? Where's the gap in pre-market? Jabon, I didn't pay attention to that, but if the stock is just making the move in the pre-market, the whole move in the pre-market, I just avoid it because it fails a lot for me. Daniel, let's see what you did there. Then we have Luis and Lou. So Daniel traded EXPE, and I actually love this. I actually caught EXPE to the long side here. I'll show you my trade. This was a drop all the way down there, pullback, reverse ABCD on the 5-minute chart, sort of an M shape right there on the 5-minute chart, took it to the short side after the confirmation, because remember guys, this is a parabolic pullback. We don't take it on the first leg down. Why is that? Because it make a new high and just continue ripping higher. It didn't do that. It did a new low where you took it to the short side and then you started partialing down. Let me show you my EXPE parabolic reversal quickly. EXPE. This was my trade on EXPE. Bad managing, but look at this. 5-minute chart dropping down, so extended from the 9 moving average on the 5-minute chart. Parabolic, right? Confirmation candles on the 1-minute chart. Weak, hammer after hammer after hammer. Not climactic volume, but it's the biggest volume we have right there. New 1-minute high. I missed the entry right here. I took it right there to the long side, put my stop loss below this candle right there. Why did I go so tight? We already had the reverse hammer right there. We already had a new low right there, but this was a fake. It came back up and I assumed that it will not come back down. It could have came back down, it could have gotten stopped out, but looking at this, it already had its chance. Now it's still strong, it's still coming back up. Took it to the long side, put my stop loss there. This was a horrible partial, and by the way, this wasn't a 10 or 20% partial, this was a 50% partial. I wanted to lock in at 2 hours just to get in literally to the goal, and then this was another 50 of the remaining, and this was the last partial that I did. That was like 25% of the remaining. This was horrible management, but the setup was there. New 2-minute high, confirmation candles right there, new 1-minute high, extended from the 9 moving average in the 5-minute chart around the daily level. This is an A+ parabolic reversal. Now Luis, I think, yeah, it was Luis, and then finally Lou. So Luis traded BAC, and I'm not sure what you did there. I can't see any entry. Where are the triangles there? Luis, are you there? I do not have that yet. Working on that. I did not trade this. Oh, okay, see, you did not trade this because I'm viewing only since I am new to day trading. I see a hammer at 10:26 on the 1-minute chart. Can you talk about how you would enter this trade? Let's see this. This, what time frame? This is the 5-minute chart, and I can't figure out what the time frame is there. This is the 1-minute chart. Unfortunately, you didn't take screenshot around 9 here on the 1-minute chart, so it's tough to say. But how would I trade this? Look, this is extended from the 9 moving average on the 5-minute chart right here, so I would definitely be short bias on this thing. If I see a confirmation candle, which is a 1-minute low or a 2-minute low, 1-minute reverse hammer or shooting star, or 2-minute reverse hammer or shooting star, and after that a new low, that would be my entry, and I bet I would have been stopped out right here. Like 100% I would be stopped out right there. If there was a confirmation candle right here, and I took it to the short side, 100% at a new, sometimes a new 2-minute high, I could bear that and I could hold against that. But a new 5-minute high, it's a 100% exit for me. Then right here at 9:30, if I see another confirmation candle with new lows, I would assume that this is a double top with the second top lower than the first one. Confirmation candle, it's still extended from the 9 moving average in the 5-minute chart. Now I'm also having a double top confirmation for me, and I would take it somewhere right there. And the key is confirmation candle. If I have engulfings or huge candles on the 1-minute chart, I would just miss this move right here. So Lou traded ACB, and this, we actually went through this one. Yeah, this is Valentin. Let's see Lou. ACB, what you did there. Yeah, this is similar one, so we won't waste time on this thing. Descending triangle, W shape on the 5-minute chart, new 5-minute low, took it to the short side there, and partial at the break of the low of the day, the rest at break even. Added more down there. Now this I wouldn't have done. This is the third continuous candle with lower lows and lower highs. I see that it worked out in this case, but I would just simply personally avoid this trade. So yeah, that's it guys. We're a little bit of time right here. If you have any questions, you could ask me. I could still spend a few minutes right here, and if not, you could have a great day, and I hope you have a great day. Don't overtrade, and I'll be in the chat room. Well, have a great day everyone then. Guys on YouTube, thank you for sticking here with us. If you have any questions, I'm typing my email here. You could feel free to email me, and I'll do my best to help you as well.